Sitting down today with Sam Broom, who's an investment executive here at Sprott Global Resources. Sam, thanks for joining me. How are you?
I'm very good, thanks, Albert. Thanks for having me on.
It's my pleasure, Sam. You wrote a very interesting piece recently for Sprott's Thoughts about your thesis for Cobalt, and you compared and contrasted it with lithium and the battery boom that is supposed to propel the price of lithium up. Can we just start by talking about sort of the battery boom that people are expecting and sort of the shift to alternative sources of energy?
Sure. So obviously the battery revolution isn't exactly a brand new concept. People have been using lithium-ion batteries for some time now to power devices, your iPhone, your iPad, your laptop. I think the thing that's really starting to drive interest in the sector is you've had big-time investors and entrepreneurs, guys like Elon Musk, who have come out and said, we're going to go 100% at this, we're going to revolutionize the energy industry, the transport industry, and lithium-ion batteries are going to be the way that we're going to do it. So the theme has started to mature. It's started to hit that point where it's reaching critical mass, and the adoption of the technologies is going mainstream. And you've just started to see the demand side for the raw materials actually hit the various markets, the graphite, the lithium, and now the cobalt. So as far as I'm concerned, we're just starting to hit the stage where this theme, this narrative is becoming real.
Right, and you mentioned Elon Musk by name. He certainly has very ambitious plans for, I guess, just reinventing the entire electrical grid, right?
Yeah, well, obviously Elon's an extremely talented man. He's a visionary. He's very aggressive. He's made his plans very clear. Obviously, he's talked about changing the game, especially in the electric vehicle world and now beyond into the home and industrial energy storage markets. With the growth of renewable energies, obviously technologies like solar and wind, they're not great at providing baseload power. The problem there is, when it's nighttime, what do you do for power? So his solution is obviously to mainstream large-scale energy storage, and to do that, you need large batteries to store the energy that you make when the wind's blowing or the sun is shining. So I think he's going to revolutionise it. I'm sure he's not going to be the only player. He's got this gigafactory that he's building out in Nevada, but there are, I think, as much as 12 other mega factories being built around the world. So it's not just Elon Musk. There's a whole host of other players who can see the change, the paradigm shift really in the energy space. And it looks like lithium-ion batteries, in one way or another, are going to be the crucial part in that initial phase of the electrification process.
Right, and a lot of people are sort of taking for granted that this switchover is going to happen, and it looks like lithium technology is positioned very well. Your take on it, though, is that if this happens, when this happens, lithium is not going to be the only beneficiary. So let's talk about cobalt and how that fits in.
Yeah, sure. So obviously, lithium was probably the initial benefactor of this move. Lithium being in the name of the battery, it's the obvious case, first point of call for investors. However, if you take a look at what actually goes into these batteries, there's actually a lot less lithium than you think. So I think it's, was it Robert Friedland famously said, they shouldn't be called lithium-ion, they should be called nickel-cobalt batteries. Now, there are various variety of lithium-ion batteries. And if you go and have a look, most of the varieties will have an N and a C in their name. There are various reasons for that, but one of them being that cobalt in particular is a material that increases the energy density of a battery. So to put that in layman's terms, it makes the batteries be able to store more energy and power devices or cars for longer in between charges. So there's two concepts when it comes to lithium-ion batteries. There's energy density and then there's power. So power is what, as far as I'm aware, is what drives, is the current. So say you've got a car and you need rapid acceleration, that's what the power, you need materials that provide the power, whereas the Cobalt provides the batteries with energy density, which means they can go for longer periods of time without charging. And that's why Cobalt is extremely important in these lithium-ion batteries. So people talk about substitution if prices got too high. It's definitely something I'm watching, but as far as I'm aware, Cobalt is one of the best materials for increasing the energy density of a battery.
And that energy density you speak of is basically the crux of the problem, right? When we're talking about electrical powered vehicles, times between recharges, miles between recharges, this is particularly or essentially the knock against this technology right now.
Exactly, and I think it's going to be extremely important early on in the development of the electric vehicle revolution. Before you've got charging stations all over the place, you need to be able to drive for hundreds of miles without a charge. So I think you'll find that the Cobalt is critical to the development.
In the article you mentioned, I don't know who was responsible for the projection, but something like 10 to 12% annual growth. Is it in the lithium demand or is it in the lithium price?
I think that was referring to the growth of the electric vehicle complex and the battery complex in general. So, whether or not that 10 to 12% plays out, I think from what I've seen, that's a middle of the road estimate. I've seen lower estimates, I've seen higher estimates, but I tend to think even if a fraction of that is true, let's say we only get 5% growth, it's going to result in a significant increase in demand for the inputs to these batteries. If you compound that out over say 10 years, it's certainly an interesting landscape to be looking at.
So if you're optimistic about the future of electrical cars and also this project that Elon Musk is working on, Solar City, you have to feel pretty good about the demand side. But as you state in the article, this is really only half of the equation. So you have the supply side as well, and you make a pretty compelling argument where we should look at the supply side. So why don't we get into that? Sure,
yeah. The supply side is probably the biggest factor why I'm interested in Cobalt. As I mentioned in that article, 60%, I've seen as high as 60% of global Cobalt supply comes out of the Democratic Republic of Congo, which if anyone takes a look at the country, it's an interesting place. The current president, Joseph Kabila, came into power in the mid-2000s after a long and brutal civil war. The country has been relatively stable since, which has allowed the Katanga province, which is in the country's south, to produce a lot of mainly copper with a cobalt credit. So that's where the 65% of cobalt production comes out of. It's in this Katanga province in the south of the country. Now, Kabila has just finished his two terms in power. He was supposed to step down at the end of last year. However, he did not do this. He made up all sorts of excuses why the country couldn't hold democratic elections, and he delayed the whole process and only recently came out and revised the timeline of the end of this year, 2017, to hold elections. So history suggests that he's probably, it's unlikely that he's going to step down, at least as he stated. So I would be very surprised if it all goes to plan and he steps down come the end of 2017. Now, what happens next? Who really knows? But I think the likely outcomes range from minor conflict causing some disruption in the Katanga province, thus affecting mine output to some degree, through to full-on civil war, which history suggests completely decimates mine output from the country. So if the worst case were to happen, we could literally see 60 to 65% of the world's cobalt production hit almost overnight. So it doesn't take much of a rocket scientist to figure out that when you've got growing demand hit with a massive supply shock, prices tend to do one thing. And it's not a complex thesis. It's very simple, but often simplicity makes the most sense in the investing world. So that's why I think there's a cocktail for higher cobalt prices, possibly quite significantly.
I guess most people would agree that a simple thesis is a good one, and what makes these things difficult is the implementation. So with any commodity, the most straightforward way would be to hold the commodity. That's easy when it comes to things like, for instance, gold and silver. Much more difficult when you're talking about lithium, cobalt, these things. Where should people be looking? You said 60% is essentially a risk supply coming out of the DRC. There's another 40% then that is coming from elsewhere. Are there reasonable targets within that 40% that investors should be looking at?
Yeah, it's a tough one because with cobalt, only about 6% of global cobalt supply actually comes from pure play cobalt producers, right? So 94% of cobalt production occurs as a byproduct from either nickel and copper mining. So investing in the miners, you basically can't, at least in terms of major mining companies. You can invest in majors that have a small component of their annual production being cobalt, but you're not going to get the leverage to the price rising. So, one way for probably more sophisticated investors, a number of hedge funds have been rumored to be buying the physical metal, which isn't easy to do, and you need large storage to do that. That's not something that I think is a method that the retail smaller investors should look at. So that leaves us with very few options, of which very few are quality, but there are some options out there. As we know at the moment, most of the cobalt comes out of the Congo. Secondarily, you're looking at Russia and China, which produce a big amount of cobalt. None of those jurisdictions are on my favorite list. So there is one jurisdiction that a lot of people forget about when it comes to cobalt, and that is Australia. Obviously, being a first world country with a world-class mining code, world-class workforce, infrastructure, it's one of the best mining jurisdictions in the world. Now, Australia is endowed with some very, very large nickel, what's called nickel laterite deposits. Now, I know Rick was interviewed a while back and asked about cobalt, and he mentioned that he thinks it'll be hard to invest in cobalt because most deposits are going to be nickel mines dressed up as cobalt mines, and he was largely right with that. But in saying that, these nickel laterites in Australia have significant amounts of cobalt in them. We're talking roughly a third, sometimes as high as a half of the in situ value of the deposit at current prices is derived in the cobalt credits. So there are a number of junior explorers, I'd probably mainly term them optionality plays, that have existing large, low to moderate grade nickel laterite mines that have significant cobalt credits. And I think that's probably the best way to play this game because you're getting a large degree of optionality, what I'd probably term quality optionality. That means these deposits aren't that far out of the money. They don't need much higher pricing to work. They probably need primarily slightly higher nickel prices, but if cobalt really exploded, that would change the game for the economics on these deposits. They're large, they're in safe jurisdictions, you can invest in a liquid market on the ASX, and we're starting to see names like Robert Friedland move into the sector and take positions in some of these companies. So people have seen the value there, and I think there's a real opportunity there, particularly given that nickel is so out of favour. You can buy these companies for valuations 1/10 of what they were achieving 10 years ago in the height of the nickel boom. So I think investors should really keep a look on primarily the Australian market. There are some opportunities in the Canadian market. I like them less. There are geological and climate reasons why Canada doesn't have these nickel laterite deposits. But there are some options on the TSX, but primarily I'm looking at the Australian exchange for the junior opportunities that have this leverage to the cobalt price.
All right, very good. Thank you for sharing your ideas, Sam, and also a direct way where investors can access and actually act on your thesis. Thank you very much for joining me. Once again, this is Sam Broom. He's an investment executive with Sprott Global Resources, and please consult the show notes. We have his contact information there if you'd like to get in touch with him and learn more about this thesis and the companies that he believes could benefit from a surge in cobalt. Sam, thank you for joining me. Really appreciate it.
Albert, thanks for having me.